You've been scrolling and you saw some guy in a rented Lambo telling you his LLC pays for everything and he hasn't touched a W-2 in years. Let's talk about what's actually happening there, because the IRS has seen that video too. Here's the uncomfortable truth nobody puts in their reel. Profit gets taxed. Full stop. No exceptions, no loopholes, no secret handshake. It doesn't matter if you wrapped your business in a C Corp, an S Corp, an LLC, or named it after your golden retriever. If money is being made, somebody is writing a check to the government. Think of your business structure like a costume, not a disguise. The IRS doesn't care what the outfit looks like, they care what's underneath. And what's underneath is always taxable income. Now, here's where it gets interesting and where most people get it completely wrong. There is a massive, legal, legitimate difference between tax evasion and tax strategy. And confusing the two is what turns a smart entrepreneur into an audit statistic. The system actually gives you 3 real tools to work with: deductions that shrink your taxable income, credits that directly cut the taxes you owe, and exclusions that keep certain income out of the taxable bucket entirely. That's not a hack. That's the tax code doing exactly what Congress designed it to do. But, and this is the part the influencer skipped, every single one of those tools comes with rules, documentation requirements, and a burden of proof that falls entirely on you. That lunch wasn't a business meal because you talked about work for 4 minutes. That Vegas trip wasn't a conference because you handed someone a business card at the pool. The IRS has seen every creative interpretation imaginable, and they have decades of case law built around shutting them down. Claiming your vacation home, your wardrobe, or your personal vehicle as a full business write-off without proper substantiation isn't boldness, it's just an expensive mistake waiting on a timer. Here's the historical pattern that repeats itself like clockwork. Every economic boom creates a new wave of tax freedom. Content, people overclaim, enforcement cycles catch up, and then a very surprised group of business owners learns what the word disallowance means. We are absolutely in one of those waves right now. What actually works and has worked for decades across every tax environment is boring, disciplined, and unsexy. It's tracking every legitimate expense with receipts, understanding which entity structure fits your actual income level, and working with someone who reads tax code for a living rather than someone who reads comments for validation. The misconception worth killing right now is that aggressive tax strategy is for the bold and conservative strategy is for the scared. In reality, the wealthiest, most sophisticated operators are almost always the most conservative with their tax positions because they understand that the cost of being wrong is always higher than the cost of being cautious. What separates a high-income earner who keeps their money from one who doesn't isn't the number of write-offs they claim. It's the quality of their planning, the discipline of their process, and the consistency with which they execute it year after year. Position size, process, and patience. That's the framework, whether you're investing or filing. At the end of the day, the goal isn't to look clever on paper. The goal is to actually protect what you've built and compound your wealth across decades without a federal investigation interrupting the process. Comfort comes not from gaming outcomes, but from knowing your preparation is rational, your documentation is clean, and your strategy can survive scrutiny. Nearly 30 years of working with high-income individuals has taught one consistent lesson. The people who win long-term are not the loudest in the room, they're the most prepared. Discipline, proper sizing of your risk, and consistency in your approach will always outperform the strategy that sounds coolest in a 60-second video. So the next time you see a clip promising zero taxes and total business freedom, just remember that the IRS algorithm is watching that video too, and they are significantly less impressed than the comments section. The real flex isn't avoiding the system, it's understanding it well enough to use it exactly as intended. Whether you're navigating tax strategy, building wealth through real estate, or looking for the right team to help you scale, we can help you get started. Check out our links in the description below.